In March 2025, Dipinder Goyal had made an interesting comment in an interview. He said, the quick commerce industry is burning approximately 5,000 crore rupees every quarter, and more than half of this is by Zepto. So according to him, Zepto alone was burning 2,500 crore rupees every quarter, or almost 25 crore rupees in a day. And this kind of burn rate raises serious questions on how long can a company survive like this. Which is why within a day, Zepto's co-founder Adit Palicha had to come out and respond to this. He called the claim verifiably untrue and that everything would become clear once Zepto files its financials. But the fact that he even had to respond publicly tells you a lot about the perception Zepto had at the moment. The internet simply assumed that the claim must be true, and heavy losses were just one part of the problem. Zepto was also facing public flack over its various dark patterns, where the company used to inflate its MRP or hide various charges. And for a while, it looked like that the company was losing momentum. Even in terms of market share, it was way behind Blinkit and Instamart. But in the last 6 months or so, Zepto has largely turned things around. Its revenue has grown massively, losses largely controlled, and even the dark pattern issue, the company has resolved it completely. And now it's all set to turn profitable and list on the stock market. So in this video, let's first understand the issues Zepto faced in detail and how it has overcome all these one by one. And also, what does 2026 look like for the company? All of this in this video of Backstage with Millionaires, a channel that's also part of the 01 network by Zerodha. Okay, so to understand Zepto's turnaround, we first need to understand what really was going wrong with the company. See, one thing you need to understand is that Zepto never had any real moat or defensibility in its business. And let me explain what that means. Zepto's core business is opening dark stores, taking orders on its app, and then delivering the items as quickly as possible to the customer. And if you see closely, this entire model is like a highly commoditized service business, which means that any company with more money can do it. And for customers, they don't care whether Zepto delivers the groceries to them or some other company. All they care about is that they get these things on time and at a reasonable price. And this was really the first big challenge that Zepto had. See, when Zepto started delivering groceries in 10 minutes back in early 2021, it had a head start compared to Blinkit and Instamart. And for a while, Zepto became synonymous with instant delivery. But when these two companies, Swiggy and Zomato, entered the quick commerce, they came with a big war chest to fight this battle. For example, by the end of 2021, while Zomato was valued at around $12 billion, Swiggy was valued at around $10 billion, Zepto was only valued at around $225 million. And so basically, Zepto was this David against two Goliaths, Swiggy and Zomato. And Swiggy and Zomato used their massive capital advantage in opening up dark stores in massive numbers. So by early 2024, while Swiggy Instamart had 705 dark stores, Blinkit had around 526, Zepto was way behind at just 350 dark stores. So right in the beginning, Zepto had already lost the race in terms of dark stores. And in the quick commerce business, the number of dark stores is the single biggest advantage for a company. Basically, the more number of dark stores you have, the denser your network is, and which means that you can deliver an order faster and cheaper compared to others. For example, let's say if a Blinkit store is 1 kilometer away from a customer and Zepto is at 2 or 3 kilometers, then Zepto will have to spend more money to deliver every single order. And even if this gap is 5 to 10 rupees on every order, if you scale it to millions of orders in a day, this number scales to crores of rupees. And so just to stay in the race with these two companies, Zepto was burning more and more money. The next issue that Zepto faced was that it was losing market share very fast. See, as I said, Zepto was arguably the first player in the quick commerce space. But when these two other players entered this race, they came with their own massive customer base. For example, in the beginning of 2021, both Swiggy and Zomato had around 6 to 7 million customers each for their existing food delivery business. And when these companies entered quick commerce, most of their existing customers started using their services, namely Blinkit and Instamart. And as a result, by the end of 2024, while Blinkit had close to 40% market share, Swiggy Instamart had 28%, Zepto was at third position with around 23%. And to regain this market share, Zepto tried all sorts of things. For example, offering free deliveries on orders of more than 99 rupees or 70 to 80% discounts on its cafe items. But all of this meant that the company was losing significant amount of money on every single order. And this is when the next challenge for Zepto emerged, dark patterns. See, because Zepto was burning more money per order than its competitors, it tried to recover some of that through some additional fees, which people call as dark patterns. And it is basically design tricks that push you into spending more or hide costs until the last second. For example, in the case of Zepto, firstly there was the issue of additional costs. For example, in this case, the price of the item is 254 rupees, but the final price at the time of the checkout is 343 rupees. And if you look closely, it adds all these things like item handling costs, processing fees, GST, delivery fee, and something called cash handling fees as well. Then there was the case of inflated discounts. For example, in this case, this person ordered items worth 173 rupees. And according to Zepto, he somehow saved 680 rupees on this single order. And this is because the company first inflated prices and added all these random charges, and then it waived off all these fees. And these things looked super confusing and misleading to the customers. And over time, these patterns build a perception that Zepto was not being transparent, and people started bashing them all over the internet. In fact, there's even a dedicated Reddit community with 35k members calling out Zepto's malpractices. And finally, amidst all this, Zepto also saw many important people leaving the company. For example, within a few months, all of these people left the company. Chandan Rungta, CEO of Zepto's meat business, Apurv Pandey, Senior VP of Strategy, Chandresh Dedia, VP and Head of IT, Shashank Shekhar Sharma, CXO of Zepto Cafe, and Roshan Sheikh, Chief Expansion Officer. And all of them quit within a couple of months. And for a while, it looked like that Zepto is in serious trouble. The company may not get funded and it'll end up like Dunzo or Big Basket. But this is when Adit Palicha and his team pulled off a serious comeback, something that seemed impossible, especially in the quick commerce sector. On 16th October 2025, Zepto announced that it has raised a $450 million funding at $7 billion valuation. And this wasn't just a regular fundraise. $450 million or almost 4,000 crore rupees, that too for a loss-making late-stage company in a sector with cutthroat competition. I mean, investors don't put so much money at this stage of a company unless they see a clear sign of growth and profitability. Companies like Dunzo and Big Basket could not do it. And that's why Zepto's fundraise surprised a lot of people. But in reality, Zepto had done some serious improvements in its business in the last few months, which is why the investors showed this confidence in the company. Firstly, Zepto's revenue increased 150% in FY25. From 4,450 crore rupees last year, it increased to 11,110 crore rupees in FY25. Basically, all the efforts that the company did in expansion, giving discounts, and other things paid off handsomely for Zepto. Its daily orders jumped from around 0.5 million in 2024 to almost 2 million orders in 2025. And at the same time, their losses have nearly halved compared to the last year. Now, this kind of growth along with shrinking losses is extremely rare in quick commerce, and it only happens when a company fixes its unit economics at the core. See, Zepto's initial focus was on how to turn its individual dark stores profitable, and today almost 75% of Zepto's dark stores are profitable. In addition, company's total monthly burn has dropped from nearly $80 million to 10 to 20 million every month. That's a 75% reduction in burn without slowing down growth. And this is what basically told the investors that this model can actually work at scale. So now the question is, how did they pull this off? Well, with just two things: operational discipline and smart monetization. See, on the operation side, Zepto got ruthless. It cut marketing spend by almost 50%, hundreds of roles were reduced, and the company even froze hiring. Next, the company got extremely efficient inside its dark stores. It first reduced its inventory down to 2,500 to 3,000 high velocity SKUs. And this reduced wastage, kept the stores smaller, and improved the speed at which the items got packed. And as a result of these, the dark stores that once took almost 2 years to turn profitable now started becoming EBITDA positive in 6 to 9 months. Next, on the logistics side, the company shifted a huge chunk of its riders to EVs, which brought down the cost on every delivery. And all of these changes, compounded over millions of orders, have resulted in this efficiency that you see today. Also, cutting costs was not the only reason for Zepto's turnaround. The company has also worked on increasing its revenue part. Firstly, the company expanded into higher margin categories like beauty, electronics, and home essentials, and today almost 25% of its sales come from these high margin categories, compared to just 10% 2 years ago. And then comes Zepto Atom, which is a very powerful addition to the company. And this is basically the retail media and advertising engine for Zepto. It allows FMCG brands and D2C companies to pay for sponsored placements, banner ads, and targeted promotions right inside Zepto's app. And it is similar to the ads that you would have seen on Amazon. But for Zepto, this is a very important part of their business. According to Adit, the advertising business already generates 130 crore rupees per month in revenue, which is almost 1500 crore rupees per year. But more importantly, this helps the company significantly in its profit margins, since it costs almost nothing to operate. And all of this has resulted in this financial turnaround you see in Zepto's FY25 numbers. And along with numbers, the company also worked on its public perception. Its CEO Adit Palicha addressed the issue of dark patterns publicly. He said, "Dark patterns were a mistake. We killed it. Negative feedback made us realize that this is not who we are, and that they've removed hidden fees, redesigned the checkout flow, and restored transparency." And today, sentiments on social media seems to be changing about the company. People who earlier posted only complaints are now also talking about zero fee deliveries and everyday low prices. And finally, Zepto's market share is also now rising thanks to low prices and free deliveries on orders above 99 rupees. Today, Zepto has surpassed Swiggy Instamart and is number 2 in terms of market share. It has increased its market share from around 23% last year to almost 30% now. So if 2025 was about stabilizing the business for Zepto, 2026 will be about finding the real moat for the company. Also, the company is planning to do an IPO as well this year. But coming back to the more important point, which is finding an actual moat. See, Zepto is no longer trying to be just another quick commerce player. It now has a very clear positioning in mind, and that is to be the DMart of the quick commerce world. And let me explain what that means. See, for those of you who are aware of DMart and its business, you know that it stands for something called value, which means you get good products at great value or cheaper prices. Now, this concept of value is missing in the quick commerce sector. All the players are playing the speed game, basically who can deliver the order faster, and no one is focusing on who can deliver the products cheaper. And this is the game that Zepto wants to play. And there's actually a term for this concept, which is called everyday low prices, or EDLP. Zepto has borrowed this concept from DMart, who in turn has borrowed it from Walmart. And the idea here is that if you consistently keep your prices lower compared to your competitors, then you build a loyal audience which keeps coming back to you. And this slowly becomes your moat. And this is exactly the moat that Zepto wants to build in the online world. It understands that speed is no more the moat in this business, because everyone can deliver in 10 to 15 minutes. And so the future belongs to the company that gives customers both speed and value, and not just one or the other. And Zepto has rebuilt its platform around this idea. Its app today looks very different from a year ago. Today it has an everyday lowest price section, a 50% off zone for heavy discount hunters, a super mall experience for larger bundled carts, a dedicated fresh section for fruits, vegetables, dairy and bakery, and new verticals like Zepto Pharmacy. Also, a big focus of Zepto now is on availability of products. Basically, the idea is that if customers can reliably find the same products every time, then they might become sticky customers. And this is actually one of the core reasons why DMart built such a strong loyalty offline. And Zepto is trying to create the same reliability online. Another piece of Zepto's future is category expansion that improves its margins. See, the high frequency fresh items keep the customers come back, but high margin categories like pharmacy, beauty, home needs and refurbished electronics will help the company improve its unit economics a lot. And so their super mall feature is designed exactly for this, to increase average order value by encouraging customers to mix essentials with non-essentials in a single delivery. And the results of all these efforts we will see in 2026. Can the company maintain its turnaround journey and list successfully on the stock markets, or are there still some big roadblocks for the company? In the end, let me know what you think of this turnaround of Zepto. Do you agree with all of these claims that the company has made, or do you think there is still a room for improvement? Let us know in the comments. As always, thanks for watching, and I'll see you in the next one.